Good Day Chicago at 7 starts now.
And stocks once again lower on Wall Street after a massive sell-off. We're going to find out if this trend is going to continue into next week. Stick around.
The stock market took another dip yesterday, but not nearly as dramatic as a fall as Wednesday, when the Dow dropped more than 1,100 points. Investors were left nervous after some weak corporate earning reports, coupled with fears a recession could be on the way. Joining us this morning is Michael D. Ruggiero, Associate Vice President of Ameriprise Financial, LLC. Thanks for being with us and breaking this down for us. So right now, let's break down what these numbers mean for investors.
Well, if you're a long-term investor, this is something that you should not be panicking about. The Dow was down 1,100 points on Wednesday. Yesterday, the S&P and NASDAQ were up, but then they finished slightly lower, while the Dow was down considerably, but then it pulled back. It was still negative, but not as bad as it had started the day. Now, today, the futures show that the market's supposed to open at 300. It looks like the market is looking for a bottom. And I think that we are near that bottom with the market.
Okay, well, that's good to hear. But what do you want people to do? When you say don't panic, what's a next step as investors are watching and waiting?
The next step would be to review your portfolio, make sure that your risk tolerance is where you need it to be. The only ones that should be panicking are a retiree that is in his mid-60s or older, someone that's got a longer time horizon of 3 years or more, 5 years or more. They should actually probably be dollar cost averaging into their portfolio as well as their 401ks and take advantage of weaker stock prices at this time.
Okay, and what can turn this around? We always like to end at least on some type of a bright note.
The news isn't all bad out there. Economic growth in the corporate world is stronger, but it will be lower this year. U.S. equities are still above the average price earnings ratio. You have a lot of out there. You have China, which is shut down right now, but that isn't working well for them. So they just may start opening up it just as a result of it not working. We're trying to figure out the peace trade, if you will, which is, we've been in a peaceful world global environment since the Berlin Wall fell, but now we have Russia out there, China out there. If that continues, yes, there will be slower economic growth and inflation. There's also, good jobs reports out there as well. So there is good news out there, but it's just being overshadowed by everything that's going on in the global markets.
We definitely appreciate you ending this on a positive note. Michael, thank you. Have a fantastic weekend, sir.
Thank you very much. Take care.